very strong opening. So the market, it seems, has digested that US Fed rate hike.
Trading below the 19,800 mark, but the mid-cap index is going pretty strong. For the markets, at the day's low is where Nifty is at.
One way, slow and steady, but lower. 19,667 is where we are finding ourselves at. We'll end down just some 75 points lower, which is a far cry from where the market was. We were down about 150 odd points or so.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Stock markets rise across the world as investors digest an expected rate hike from the US Fed, but India bucks the trend. Sensex loses 440 points, Nifty loses over 100 after failing to hold early gains. M&M shares tumble in trade after the company discloses the acquisition of 3.5% stake in RBL Bank. Brokerages are concerned about Mahindra Group's capital allocation policy after the 400 crore rupee non-core investment. Pharma stocks start the first quarter of this fiscal on a good note on M&A possibilities, while Cipla hits a record high as promoters of the company are in talks with private equity players to sell some stake in the company. Sources say Blackstone and Baring Asia are likely to be interested. Cipla responds to CNBC-TV18 News Break saying it is unaware of any event that requires disclosures. Nestle slips despite steady earnings. However, domestic volume growth misses estimates, while Colgate races after beating estimates on all major parameters with a 30% rise in profits. Separately, Marico gains on acquisition plans. Bajaj Finserv tumbles close to 1% after reporting a mixed bag in the first quarter. Shriram Finance is under pressure despite a strong set. ACC rallies 1% on the back of a big beat. Okay, those are the headlines, but let's go across straight to the day's trading action. Stock markets rose across the world after investors digested an expected rate hike from the US Fed, but India bucked the trend. Markets failed to hold opening gains, with Nifty and Sensex ending with cuts of over 0.5%. Banks were the biggest laggards. Prashant Nair is here with the details. Prashant.
It was a lower close, but it could have been far worse. The Nifty was down 150 points at one point, but there was a sharp recovery starting 3 p.m. It was expiry. The 3 p.m. factor plays often on these days. And starting 3 p.m., the market staged a 80-point bounce. We ended about 80 points lower for the index. Banks also, there was a recovery, not quite strong as what we had on the Nifty. Mid-caps and small-caps ended up. Mid-caps more, small-cap was largely flattish. Pharma was the sector of the day. The Nifty Pharma index, by the way, was up about 4.5% at one point. It gave up gains, but still pretty good. Cipla, Sun Pharma, Divi, Cipla, of course, the CNBC-TV18 News Break acting as a fillip, earnings to boot. DRL, earnings markets liked it. Gland, Oro Pharma, Ipca, Natco, Syngene also perhaps reacting to stronger numbers. Losers coming through with Mahindra and Mahindra. Capital allocation worries with regards to RBL. Again, it was our story. Tech Mahindra, BPCL, there was Tata Communications, Britannia and Nestle, which were some of the other losers that we had. Losses coming through in these PSU names. RVNL, the government's booking profits after the 100% rally this year through that OFS. And maybe market fears that it'll do same in others as well. SJVN was down. Rights as a stock was lower as well. Stocks have had fantastic runs. Canfin Homes, for the third straight session, lower. BPCL pulled back. Jyoti Laboratories after very strong gains last 2 days. Mahindra & Mahindra Finance, Fine Organics, Arvind were some of the others. Gainers coming through in REC, PFC. Colgate made an all-time high. Markets like the numbers, margins there. Birla Soft also reported numbers mid-afternoon. Godfrey Phillips, Texmaco Rail, Raymond, etc. were some of the other names. The market trend is still positive. The bounce today, perhaps, I think, in a way, adds to that feeling that one should be open to the idea, even after the strong gains that we've had, that perhaps there is more to go here. US markets were flat overnight, but internals were strong. So keep an open mind as we come back tomorrow morning. Back to you.
Okay, we will. Prashant, thank you so much for that take. In fact, let's talk about the US markets and the fact that the US Federal Reserve approved what was a much anticipated rate hike of 25 basis points. This takes benchmark borrowing costs in the United States to their highest levels in 22 years. Investors are expecting that this would be the last rate hike before Fed hits the pause button. Jerome Powell said that the bank will take a data-dependent approach. US inflation remains above the Fed's 2% target despite marking a 12th consecutive month of decline in June. Moving on to the second headline now, Mahindra & Mahindra fell over 6% after the company disclosed the acquisition of 3.5% stake in RBL Bank. That's the CNBC-TV18 News Break confirmed. Nisha Pudar joins in with the details. Nisha.
That's right. It was a CNBC-TV18 news break in response to which both RBL Bank as well as M&M had issued clarifications to the stock exchanges, confirming to our story that M&M has picked up 3.5% stake in RBL Bank as of 21st of July. Now, they have also told the exchanges that they had spent around 400 crore rupees in picking up the stake, and they may even look at upping their stake in RBL Bank to up to 9.9% stake, which is in terms of what RBI allows at this point in terms of bank investments by a corporate. Now, what this did was it spooked the market and the investors in M&M, because an automaker made a non-core investment and is looking at hiking its stake in a bank without giving out the clarity and the strategic intent of making such a non-core investment. So capital allocation by M&M has been a spot of bother for the market, and therefore M&M was the top Nifty loser in the trading session. More clarity is required from the company, and also their path to increasing the stake in RBL Bank and what purpose it solves for the group and the company.
Okay, all right, Nisha, thank you so much for joining us with these details. However, the question to ask is whether RBI will allow a corporate to buy a stake in a bank. If yes, then how much? Let's go across to Lata to understand this. Lata?
Going to 9.9% of stake in RBL won't be a problem for M&M. They have to take RBI permission. The rules require that when you cross 5%, RBI, you have to go to RBI for permission, and they will determine whether you are fit and proper. Now, M&M would be fit and proper. It won't be seen as a money launderer or anything. But beyond 9.9, the rules itself don't allow a corporate to hold. A single entity can hold 15% if it is a well-regulated financial entity, like a pension fund or a sovereign wealth fund, or say an international financial corporation, a multilateral bank, but not a corporate. There the limit is 9.9%. Now, in 2020, there was an RBI-appointed group which recommended that conglomerates be given licenses, banking licenses with suitable safeguards. But in 21, when RBI looked at those recommendations, it accepted 21 of the 33 recommendations. It did not accept the recommendation of banking license to conglomerates. That's a decision as recently as 21. To expect them to change their mind now is a little tough. In between, there were two banks which desperately needed capital. Yes Bank, Reserve Bank went round asking other banks to put in capital. In LVB's case, Lakshmi Vilas Bank, they handed it over to DBS, a Singaporean bank. They did not even at that time seek the help of any conglomerate. So looks like, going by the way they have treated the regulations and their actual walk, the Reserve Bank is unlikely to allow corporates to hold banking licenses. So M&M will have to stay at 9.9. It's at best a financial investment.
Okay, Lata, thank you so much for joining us and making sense of this big move that we've seen from M&M. But moving on with that to the third headline now. Cipla hit a record high in trade today after a CNBC-TV18 exclusive suggested that promoters of the company are looking to offload part of their stake. Sources have told CNBC-TV18 that Blackstone and Baring Asia are likely to be interested. Nisha Pudar is back with us and will tell us all the details. Nisha, what does it mean for the company?
That's right. 3 independent sources with direct knowledge of the developments of Cipla have shared with CNBC-TV18 that the promoters of the company are open and exploring the option of part stake sale in the company. Remember, they own about 33.5% stake in Cipla, and we hear that they are in talks with several private equity players for exploring a transaction and stake sale to get them on board. Now, we do gather that Blackstone as well as Baring Asia, amongst other private equity players, could be more inclined in exploring a transaction at Cipla. Now, here they are trying to solve for 2 important aspects, the promoters. First of all, succession planning has been one question that all the investors and experts have always asked this company, given that their second generation of the promoter group are octogenarians now, still active, but on the other hand, the third generation has little involvement. Only one of the third generation promoter family participants is part of the company. So succession planning is critical. cycle, and on the other hand, private equity has been interested in this particular space, and they coming on board could also revamp the strategy and also improve the performance matrices. We did reach out to all the parties named in this particular story, and we didn't get any response from any of them. Of course, Cipla has issued a clarifications to the stock exchanges on our news break. But a stake sale by the Cipla promoters is what is being explored.
Okay, Nisha, thank you so much for joining us with those important details. Staying with the pharma sector now, other stocks also gained in trade. Sun Pharma, Divi's Labs, Apollo Hospitals, all are the top Nifty gainers. Ekta Batra is here with more on what's driving the pharma rally and why is there a rise in M&A interest across the promoter-driven companies.
Pharma stocks have started Q1 on a good note, along with possibilities of M&A, which has fired up sentiment today. Let's start with the earnings. Pharma majors Cipla and Dr. Reddy's both reported a top-down beat yesterday. Syngene, Biocon's research arm, also saw revenues grow 25% year-on-year. Focusing on the two large generic drug manufacturers, Cipla and Dr. Reddy's, a key theme that played out for them was the US doing better than expectations, aided by contribution from key drug Revlimid generic, used for cancer. The other factor that has fired up a lot of the pharma stocks is the growing private equity interest in the sector, with the latest trigger being the story broken by CNBC-TV18 that private equity investors may be keen to pick up a slice of the promoter stake in Cipla. While the promoters of Cipla have not responded to CNBC-TV18, Cipla has informed the exchanges that it has nothing material to disclose to investors. In fact, we have seen a significant amount of M&A in the pharmaceutical space, with some examples being Fosun Pharma buying Gland Pharma for over $1 billion in 2017, KKR picking up a controlling stake in JB Chemicals. The stock has soared around 225% since the deal. Carlyle bought 20% stake in Piramal Pharma for more than 3,500 odd crores. Unichem promoters also sold controlling stake to Ipca Labs. The heightened interest has put the spotlight on several promoter-driven companies in the pharmaceutical space where there are no clear succession plans in place. Lastly, while there may be headwinds such as sustainable growth drivers, ex of Revlimid generic, tepid growth in India for the likes of Dr. Reddy's, it's been a great year for many pharma companies. We leave you with the current valuation picture.
Ekta, thank you so much for that analysis. So that's about the pharma space. But let's move on now. Netweb Technologies made a stellar debut on the Dalal Street today. The stock got listed at 947 rupees per share at NSE, that is 89% premium over its issue price of 500 rupees per share. Reema Tendulkar joins us with the details and the fundamentals of the company as well. Reema.
Thanks so much for that. A bumper listing for Netweb Technologies, as you pointed out. The subscription, the interest in the company was also very high. The overall subscription being more than 90 times, with the QIB portion being subscribed to 20 times. Now, this is a company which makes you supercomputers, high-performance computing solution. They're into private cloud infrastructure, data center servers, very niche, very precise. It's an electronic manufacturing services company, sort of an EMS, but for the supercomputers. The financials have been very strong. The revenue growth over the last 3 years is more than 40%. The gross margins holding above 25%, and EBITDA margins have been inching up. On the COVID year of FY20, EBITDA margins were 5%, and last year they had come up to 16%. Now, the overall size of the issue was 631 crores, but part of it was an offer for sale by the promoters because they wanted to bring their holding down to 75%. But they also raised a fresh issue of 200 odd crores, which is for a working capital requirement. They're also planning to fund some capex, build a surface mount technology, and they plan to repay some debt.
Thank you, Reema, for joining us with all the details on Netweb Technologies. Moving on to the other stock that was in news today, RVNL fell 5% or 6% in trade after the government proposed to sell about 5.36% stake in the company through an offer for sale, which opens today. It also proposes to offload 11.17 crore shares in the company via the OFS. Vivek Iyer is here with us. Vivek, tell us more.
Well, an important development coming in as far as RVNL is concerned. This particular move will assist the government to go ahead and meet the minimum public shareholding norms as per SEBI, thereby helping them bring their shareholding to less than 75%. So what is this move that we are talking about? The government has gone ahead and launched an OFS, or an offer for sale, as far as their holding in RVNL is concerned. The government is looking to sell close to 5.36% stake in the company via the OFS route, and we understand that the base size of this particular deal is at 3.4% of the total stake or the total shareholding of the company, and the green shoe option has been kept at an additional 1.96% of the total shareholding. The floor price for this particular OFS has been kept at 119 rupees a share, which is at 11% discount to yesterday's closing price. An interesting development and an important development to track as far as RVNL is concerned. Remember, the government held over 78% stake in the company at the end of the June quarter. Now, this particular deal will help them to bring their stake below 75%, which is required as per SEBI norms.
Okay, that is RVNL. Thank you, Vivek, for joining us with those details. Time for a break now, but stay tuned. We'll be back in a bit with all the other headlines that we are tracking for you. Welcome back. You're still tuned into Markets Today on CNBC-TV18. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. Nestle slipped 2% despite reporting steady results in Q1. However, domestic volume growth missed estimates. Meanwhile, Colgate-Palmolive India gained over 6% after beating estimates on all major parameters, with net profit rising 30% on a year-on-year basis. Mangla Malu is here with more details on this. Mangla.
Well, let's start with Nestle. Nestle results came in this morning and they were absolutely in line with what the street was anticipating, and the stock is seeing some profit taking after that. Revenue at 4650 odd crores is in line with our expectations. EBITDA a little over 1050 odd crores, and the net profit just under 700 crores is also largely in line with expectations. But these expectations, mind you, were of a very stellar set, and that's what the company reported. 15% revenue growth year on year, EBITDA growth of 25%, margins expanding, and the net profit growing by about 35 odd as well. But going into these numbers, the stock was at a record high, and as a result of which it is some profit taking that it is witnessing at higher valuations as well. But the sparkling set of teeth definitely belong to Colgate. A big move is what we're seeing on the stock after a big beat coming in on the Colgate's numbers from the top down itself. The revenues much above street expectations, the EBITDA growth was much above street expectations, margins coming in above 30%. This after the company spending more on advertisements as well, and the net profit coming in higher than estimates despite an exceptional loss. Management commentary in Colgate was extremely positive as well, where they see recovery in rural demand, and going forward they promise some sort of optimism in terms of behavior going forward, as a result of which brokerages have upped their targets on Colgate and retained their ratings as well.
That is about earnings, but FMCG stocks have been in focus. Among them coming back to you, Marico rallied over 3.5%. The FMCG major plans to acquire 57% stake in Satya Nutraceuticals for 370 crore rupees. Tell us more about it. This owns a plant-based nutrition brand, Plex. Give us more details.
Well, Marico has gone ahead and made an acquisition. In fact, they've gone ahead and announced their intent to acquire up to 58% of a plant protein-based company called Plex, and this for which they will pay around 370 odd crores. It's a positive deal for them, largely because it fits right into their strategy of digital first and healthy food foray as well, for which they have tall targets over the next couple of years as well. Plex is a well-respected brand, and at the same time it has grown extremely well as well. In FY21 the revenues were close to around 10 odd crores. That has scaled all the way up to closer to 150 crores. So let's see how much Marico's might can take it forward as well. For now, a positive deal.
Okay, all right. That is all about the FMCG space. But moving on to the fifth headline now, Bajaj Finserv, it declined nearly 1% in trade, reported 9.8% increase in net profit on a quarterly basis. However, the general insurance business witnessed a loss of 42 crore rupees. Shriram Finance, that was also under pressure despite strong quarterly results. Assets under management rose by 4.1% compared to the last quarter. Abhishek Kothari joins in with wrap on both these results. Abhishek.
Well, Bajaj Finserv reported a mixed set of earnings. Total income up about 46.5% YOY and a decline of 1.5% sequentially. The PAT was up 265% YOY and about 11.2% sequentially. However, the consolidated net profit that was up 48.5% YOY and about 9.8% sequentially. Looking at the insurance side of the business, the general insurance reported a loss versus profit YOY and profit of a sequential basis as well. The AUM growth was at 12.8% YOY and about 2.9% sequentially. In the life insurance business, the profit was strong. It grew by 25% YOY and about 500% on a sequential basis. And new business premium, that was a miss over there. It declined by 26% YOY and about 34.5% sequentially. The solvency ratio also declined sharply to about 475% when compared to 529% in the previous quarter and about 581% on a YOY basis. For Shriram Finance, the earnings was really strong in terms of the bottom line. Disbursements grew by 21.3% YOY and it declined by 1.9% sequentially. Sequentially, it's a seasonal factor that you will see a decline in disbursements. However, AUM growth was pretty strong at 18.5% YOY and about 4% sequentially. Their asset quality also improved. Gross NPA ratio came down to 6.03% when compared to 6.2% in the previous quarter. The NII growth was at 11.3% YOY and decline of about 0.24% sequentially as cost of funds did weigh in. So the net interest margin has declined by 23 basis points on a sequential basis. Profit growth was really strong at about 25% YOY and about 28% sequentially as provisions declined by 24% YOY and close to 26% sequentially. So lower provision did aid in strong earnings momentum for Shriram Finance. Back to you.
Okay, that is all about the financial space, but there are more earnings to track. It was a strong quarter for cement major ACC with an all-round beat. Operating leverage and focus on cost efficiencies resulted in strong numbers. Volume growth came in better than most peers. Nigel D'Souza is standing by with the key numbers. Nigel.
Well, that's right. ACC's numbers looked very, very strong, and it was a top-down beat that we saw. To run you through the numbers on the top line, there was a beat. That's because they sold more. Close to around 500,000 tons more of cement is what they sold in comparison to what we were working with. On the EBITDA front, the absolute number, well, there was a beat of more than 35% in comparison to what we were working with. And the margins came in at around 14.8%. We were working with a number of around 11.5%. Profit number as well looked quite good. The key reason that these numbers look very, very good is that volumes were up by close to around 20%. But the costs were down. Whether you're looking at the power and fuel cost, employee costs or other expenditure, all those costs were lower when they sold more amount of cement. And to sum this up, well, operating leverage played out. Well, you had a fair bit of savings. That skill fuel cost was down close to around 15.5%, which is good news. And finally, the WHRS plants have been coming on stream, and now they constitute close to around 8% of their mix. That compares with around 2% of their mix. So better volumes and focus on operational efficiency. That's what led to ACC's numbers looking so good. And keep in mind, they have valuation comfort as well, because on an EV per ton, it raised closer around $100 per ton.
Okay, all right. That is about ACC. Thank you so much, Nigel, for joining us with that analysis. And with that, it's a wrap in this edition of Markets Today. Thank you for watching.